look at the numbers, I mean, you think you're looking at a company that's operating in a booming economy. At the top line, we're looking at revenue up 18%, and also on the bottom line, you're looking at earnings up 29%. So very good numbers indeed. Willie, thanks for joining us this morning.
Thank you.
As I said, when you look at the numbers on the surface of it, on the face of it, it does look like you guys are really doing extremely well, particularly at a difficult time for most construction companies, because we know construction related to the World Cup has come to an end. But you are reaping the benefits of completing the projects now.
Yes, we are very pleased with our results, partly because of projects that are completed now because of the boom that we experienced, but also partly because we're getting good returns from projects working outside our country. Of the operating profit, 28% of although 22% of the turnover is from outside South Africa, 28% of the contribution towards operating profit is from outside South Africa. So, although we're operating in a difficult market has definitely reduced quite a lot. Margins are under pressure, but yes, the opportunities are still there. The fact that 2010 is now here and that we did a lot of work on the World Cup projects, there are definitely still opportunities in South Africa and also outside South Africa.
Sure, let's celebrate some of the work that you did during this previous reporting period. You all completed work on the How train. You were telling me you also completed work in Zimbabwe. Just run us through the main projects that you completed here.
Yes, on the Gautrain, we completed the grouting project.
What is that?
What it is that it is because of the ground conditions, which is not very stable, we have to place beneath, whereby they Gautrain on top of the solid ground conditions then.
Okay.
So it was...
Which route is this one? Is that
it was on the Pretoria Road, yes,
okay,
on the one from Midrand to Hatfield area. Okay. It was a very good project to us. We finished some nice bridge projects. We completed 2 large projects in Zimbabwe.
What were you doing there? Because when people talk about Zimbabwe, they think about the difficult operating environment, they think about the difficulty of getting payments in there. Were you paid?
Yes, we did work for 2 of the local South African mining companies, and we completed the projects a couple of months ago. And we made quite good money, and I'm glad the clients will also know that we made good money. And the conditions were difficult, but we worked together with the client, together with the government, and the projects were successful, and we got paid all our money. In actual fact, we'd like to go back to Zimbabwe. We see opportunity there in time to come when things settle down there.
For sure. Well, let's look forward to that day. But I also see, even overall, when you take into account, you talk about the difficult operating environment, you talk about the benefit that you got from Southern Africa. Looking at the operating profit margin, that remains stable. In this environment, I have seen other construction companies reporting operating profit margins that are down compared to the last year. How did you keep up your operating profit margin there? 6.5% we're talking about versus...
Yes, versus I think it was 6.3% the prior year. Yes, we said there were certain areas that we focused on. For example, the roads and earthworks, where we still see good opportunity. We've increased the turnover within roads and earthworks in excess of 40%, with good returns, double-digit returns. Also, building against all thinking. The building business unit did very well, and then the structures business unit also, the returns, they were very good.
One result that we saw this morning that came out was Sanyati. They are also in the construction sector, and they are talking about the uncertainty surrounding building and construction work after the World Cup. Now, we know there was a lot of work to do with the World Cup. Now, the World Cup is next month, and it's a come and gone essentially for the building companies. But are you unsure as well about the work that will come from the government side after the World Cup? What feelers are you getting there?
In terms of government work, public sector work, yes, we are not sure what is coming from government side.
Why is that?
Over the last year, very few tenders came out to the market, and the government said that they will spend a lot of money on infrastructure, but at this very moment, there are not a lot of tenders coming out. Now, whether they still need to get their act together and put the tenders out to the market, I think that's probably what it is. But in terms of the private sector, in terms of the commodities and minerals, we still see opportunity in South Africa and also outside South Africa, because we have offices in most neighboring countries, and we see the benefits from being there, that we can operate in those markets where there are opportunities in the private sector and mineral sector.
Yeah, we know, of course, the government has put on paper that it intends to spend 385 billion rand. You read another time, it's 421. But there's a lot of money that has been put on paper, so hopefully that work will begin to come through. But are you beginning to see some of the work some of that work coming through, or is it reflected in your numbers now showing your order book slightly down, 6.6 billion rand versus 6.2 billion rand the prior year?
We certainly believe that there will be still growth in order book. Margins will be under pressure. We certainly believe there is still opportunity, there's still work out there, but not necessarily in the government sector. Within SANRAL, the road sector, within the water sector, and within the power sector, where there's still work out on tender on the Medupi and Kusile power stations, where we're currently pricing and there's more work to price.
But where are margins under pressure when you are, as you say, seeing perhaps good demand coming out of the private sector? And at the same time, I'm thinking, your numbers, the numbers that you've just reported, showed very, very good protection of those margins. Is it a function of there being less work, or is it a function of there being some work, but perhaps the competition is beginning to increase for that work, and therefore you have to protect your margins and take in a lower price than you would not really want to?
Over the last 3 years, a lot of companies build up capacity. If you take Stefanutti stocks, from 2007, our turnover was 2.5 billion. We are slightly shy of 7.5 billion in this year, which in 3 years we've built up a lot of capacity. So did other companies. With the result, there's a lot of capacity and the pie is a lot smaller. And that is why there's so much competition at the moment and margins will be down.